afternoon. How's Mid-America on day 2? All right, yeah, all right, come on, that's good. All right, yeah. I got my new adopted family over here. If anybody wants to meet the Hutto family, right here. So, hey, my name is Brent Hutto. I'm the senior advisor for Truckstop. I'm also the chief fun guy. So I love to be up front and talking to owner-operators. You're my favorite segment of the marketplace. Any trucker is my favorite segment of the marketplace. I've been doing this since '98, been coming to Mid-America since '98. And like I like to famously say, I've been coming here since '98 and I've eaten my body weight in pork chops sandwiches. So please try the pork chop sandwich. The Kentucky pork producers will be happy if you do. But so really happy that you're here with us. Truckstop endeavors to always bring you information to help you with your business. It means the world to us that you succeed. And it helps our business, it helps your business too, but really, when we started the business back in 1995, it was really an endeavor of Scott Moscrip, the founder of Truckstop, to bring the information to you. And so you have every piece of information that you can to be able to run your business in your hands on your screen. All right, and a lot of it has evolved since 1995. Technology has invaded our industry, and that's a good thing, and it's a kind of a challenging thing. I get it. I really get it. And then, of course, starting in 22, we started having the fraud went from normal to about 400% more than normal. And so your lives and everybody that provides information to you, lives got a little harder because now you got to put your codes in twice. You got to get security codes. You got to do carrier identity. You got to do all these sort of things. So it makes it a little harder, but it does keep you safer and keeps your wallet a lot safer. So a lot has changed. And so today's talk is called How to Choose the Right Freight for Your Business. The person that's going to join the stage with me, he and I have been friends since 1999. 1999, 2000. So a long time. Comes from a trucking family, so he's got trucking in his blood as well. But I have just been so fortunate to be able to hear his approach to helping owner-operators just take their business seriously and help them make more money by doing the same thing, to keep it organized and get it done. But a few years ago, he talked to me about this principle called contribution to margin. And I'm like, well, I'm not an accountant, Todd. And he's like, here's how it works. And I was like, every owner-operator needs to know this. Every small fleet needs to know this about how you choose the freight for your business. So I'm going to have a few slides. If you were in here yesterday, you're probably going to see the same thing. I'll try not to be too boring with it. But I'm going to give the predominance of the time to Todd because it's his information that I and Truckstop really want you to know. All right, so I'll start with this. So I'm the relationship guy. I love relationships. I was born this way. I'm relational no matter what. And yes, just so you know, you may be asking yourself this. I wake up every day just like this. And I don't mean like this is my body. I mean, I'm like happy all the time. It's just how I am. And so I'm the relationship guy. Todd's the business guy. Although he's also a father of 4, and he's got 2 brothers, and they're all in the business. And so just like you guys have my new family in the business, it's a family thing to him, and it means a lot to him, and it means a lot to us. So we're going to be presenting this information, and I know you'll take a lot out of this. All right, so we believe in the transparency of information at Truckstop. In today's modern internet age, if you're not transparent with every piece of your information, because you and I can go on the Google, as my dad used to call it, and search the information. If you're not putting your information out there, people don't trust you. And it's the same thing for you if you're a carrier. If you're not putting your information out there, by the way, if you'll come to me afterwards, I will give you a call, I'll email you a copy of this. You're welcome to take many pictures of the stage or me or the slides, whatever. Happy to do it. This is a public disclosure. But we just believe in the transparency of information because it creates trust. All right? It's your action that produces trust, that people know that they can trust you. As a carrier, you need to be doing that, delivering on time, being in a good mood, making sure that you're fulfilling your responsibilities that you've committed to. Super important. That ends up with trust. That's super important. So we believe in the transparency of information. So there's lots of trends shaping the market. We talked about in the description of this session, we talked about trends in the marketplace, how to evaluate load opportunities, which is really the bulk of what we're going to talk about today. Tools and effective for freight management. I'm going to give you some economic information, which I think is super important, because if you kind of know where the marketplace is going, then you can navigate your business to meet the need of how the marketplace is today. Because guess what? You chose to work in an industry that is part of supply and demand, which means you don't control it, the government doesn't control it, The economy controls it, all right? So you just have to react to it. Super important that you put that in your brain as you're thinking about your operation. And then how to leverage partnerships and technology to stay ahead. Certainly you want to leverage everything you can in the marketplace that is a benefit for your operation. All right, so moving on. I talked about this yesterday. This is the first filter right now in your marketplace. And I like to click through this because it's like click, 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 click. I got the little, oh, let me go backwards. I went too many clicks. All the little fires, the little flames mean that's a hot thing boiling up right now. This is fraud. This is organized crime and regular crime trying to steal what you worked your ASS off to get. And if you're not preparing yourself for this, and I don't mean just are you making the right phone calls, you need to do that. Are you checking the emails to make sure that it matches up to the person that you've talked to before? Is it a .com or does it say .net and that's not them? So there's all kinds of things going on in the marketplace. Here's what I want to prepare you for. On top of freight fraud, in other words, cargo theft, there's also identity theft, which they can, if somebody calls you and says, I want to buy your authority, please don't do that without calling the FMCSA and tell them that you're interested in selling. By the way, it's part of your responsibility that you signed as an independent contractor, if you sign that, or if you become that you need to make sure that you let them know. It's part of the deal. It's your business, so that means you can sell it. But if somebody on the internet just reaches out and says, I'll give you 10 grand for your authority, they're probably a criminal. They say, well, I'll give you 10,000 more if you'll give me all your login credentials. They're definitely a criminal, all right? Because they will not only log into all the systems that you're in, they'll be happy to pretend to be you, and guess who gets ruined? Somebody's going to lose some freight somewhere, sure. There's insurance to cover some of that. They may haul 10,000 loads a year, and it doesn't kill their business. But they're going to pretend to be you, and they're going to ruin your reputation. It's going to take you years and a lot of cash to get through it. Please be careful in the marketplace. The number one thing today is what it was in cybercrime yesterday. It's phishing. It's somebody sending you an email that's fake. So please check everything. Don't click on links. Make sure you know exactly who it's coming from. I can't tell you enough. And this isn't anybody's business, but especially trucking. And I'll tell you, when you guys have an interruption in your cash flow, usually it's a mechanical failure, but in today's fraud marketplace, you may lose a piece of freight and it costs you $50,000 and then you're out of business. So it's a major interruption in your financial picture that puts you out of business. Now that's for anybody, but when you're a one truck or two truck owner, how many one truck carriers are in here? What we got in here? Oh, we got one, got a couple, okay. Who's a fleet? Anybody a fleet in here? Got like 5 trucks or more? 6 trucks or more? 10 trucks? How many you got, sir? 5, fantastic. How many you got, sir? 4, fantastic. Ma'am, on the front, how many do you? Okay, how many do you guys? 70, oh, fantastic, okay, wonderful. So I just give you this because it's the first filter that you need to go through to operate your business today. And I'm here to tell you, it used to be kind of like a little cyclical thing. It's not. This industry is $1 trillion of revenue. You can't name many marketplaces that are $1 trillion. And the organized crime has figured out there's a lot of open doors that they can just walk into and take what you've worked hard for. So please prepare yourself. Get great cybersecurity on the front end. Have at least someone in your office that knows how to administer it to everyone in your office on what to look for. Super important, because if you're prepared, you just don't have many problems. It's the ones that go, I'll get back to that. All right, so please prepare your business for that. Super important. So I like to start with that because it's the biggest problem that's going on today. Oh, yes, last thing. It's not going away. It's not going away, because when somebody used to have to go and be physical about taking something, that's really hard to do. It takes a lot of kind of guts and stuff. But cyber theft is the easy way and the coward's way of doing it. And boy, can they do it easily, and then you never see them again. All right, so please prepare yourself for that. All right, let's move on. All right, real quick. We've not had a trucking recession. We've had a rate recession. We haven't had a trucking recession. If you saw this yesterday, I apologize. I'm going to cover it again. All right, so you got 4 lightning bolts on here. I like the flash. As I said yesterday, it was a really fast guy when I was younger. But so on the left-hand side, you'll notice something. The yellow line is the forecast on what the marketplace was predicted to do during that time period. So the yellow line, if you'll notice, it goes up and to the right. That means, and this is full truckload freight. 80% of truck in America is full truckload. So all of how the industry is doing is measured off of full truckload freight. So you got this smooth, straight line that shows this is what the forecast was. The squiggly gray line was what it actually did. But you'll notice it goes a little above 200 million here, and then the right-hand side, it goes almost up to 280 million. So it continues to grow, and when there's a growing market, you have opportunity. That's super good for you. We have a growing population, so it continues to go up. So you'll notice the squiggly line came down on the second lightning bolt. That's 2008. That's the Great Recession when we had this banking and real estate crisis going on. But notice how long it took to get back up to even, just even, what it should have been doing according to our population. It took all the way to 2018. What happened in 2018? We instituted ELDs, and we had a really good rate marketplace. All right, so yeah, guys, come on in. Glad you guys are here. So you'll notice it evened back out in 2018 and stayed above, and then we had this giant dip called the pandemic, and then it went up, and it went up. And I'm going to show you this on the next slide. It's going to blow you away. But notice what the gray line has done since the pandemic. Did it go back below the yellow line? No, it's been above it. So it's been above what it was predicted to do, which means you have a good market. It doesn't mean we had a rate challenge in the marketplace. It's been a rate recession, no doubt. But this is like my hope slide. All right, I like to give a little hope. It's a pretty good marketplace. It's not a great marketplace, and it's getting better. And I realize rates have been depressed. There's great rates all over the place. There's not great rates everywhere, like there was certainly during the pandemic. And by the way, just so you know this, the thing that drives big rate markets for you and your business and me and all of us in our industry is regulations. All right? Regulations put a constraint on capacity or the hours of service, which is a constraint on capacity, and we have these big rate marketplaces. Either the FMCSA adjusts hours of service, or we had ELDs, which adjusted hours of service because everybody was adjusting to hours of service, or during the pandemic, we had a huge change for every person in the United States. All 337 million people made a change. And so this big rate marketplace, so all regulation run. Look for the regulations if you want to know how things change. All right, why negotiate? So this is kind of part of what Todd's going to talk about today. Why negotiate? There's an extra 10. I usually put, let's see, nope, I didn't put that one there. Okay, so let me go back to this one because in the spot market, we're the largest in transportation, but in the spot market more specifically, we're the largest expansion of freight in the history of trucking since deregulation. That was 1980. So it was the biggest marketplace. There were 28 months of growth. So it was above normal, way above normal. Came back down to normal in October of 2022. It has been normal freight in the spot market, which, by the way, people measure the market off the spot market because the spot market information that you get is the most readily and fast available to anybody in the market. The spot market data that you get on freight movements, on load volumes, is only 7 days old. Most information and data that you get is anywhere from 30 to 60 to 90 to 180 days old. So you get a snapshot of the picture. But we had 28 months of expansion, and guess what we've had on normal return? Because it's a standard supply and demand economic curve, we've had 28 months of like this sort of, in the market. So what's going to happen is in the spot market, rates were your rates, and I know this is what makes it hard. They were down about 30% below normal. All right, below what they needed to be. They came up about 15 to 16% in 2024. They're going to do at least that in 2025 and be back to normal. All right, but it'll be all year. There's not going to be a big market because we're just adjusting to the normal economy that we have. All right, so why negotiate? If you get 10 cents more, if you negotiate, by the way, any rate you see on a load board anywhere is a suggested posted rate. Please negotiate every single time. Every single time. If you get 10 cents more per load, average per year, you could put $10,000 more in your pocket. I like $10,000 more. Anytime. I got 5 kids. It's a lot of ketchup and mustard, okay? So that's pretty, it's always funny, isn't it? Yeah. All right, so why negotiate? You know why you negotiate? The broker loves to negotiate. 73% of the time, the broker is negotiating the rate on the load. 73%. That pretty much means all the time. They negotiate. They love to negotiate with you. Sometimes they're trying to go down, you're trying to go up. If you know all the information in your marketplace, and we have that on a dashboard with Truckstop, anytime you pull up a load, it gives you a complete snapshot, not just of the broker and the rate, it gives you how many trucks are in the city you're picking up in, how many trucks that are looking for loads are in the city you're taking it to, so you know your negotiation strength. Super important. Learn to negotiate, all right? There's nothing wrong with it, right? So please learn to negotiate. That 10 cents will buy a lot of things. This is a giant market. If you run into a broker that this is the broker marketplace. All right, there's about 20,000 brokers in the marketplace. Here's what I want you to look at. 50 million and down, there's only about 125 brokers. They're all small for the most part of the 20,000. If you do business with a broker and something happens and they don't meet your need, just move on. There's lots of them in the marketplace. If they're not being what you need them to be, please move on. And there are really good brokers in the marketplace. The broker has done all the work that you need to do to sell a shipper. And so you're able to really net out really effectively. If you can do business with a shipper, we at Truckstop, happy for you to do business with a shipper. It's just really hard. Remember, you're going to have to do all the work the broker did and deliver the load and everything else and have to maintain the relationship with the shipper. It's not an easy thing to do. And it costs you, the most important thing is time. All right, it costs you time. All right, so, but it's a giant marketplace that you can do very well in. And if you develop a relationship with broker, and I suggest you get for 3 or 4 or 5 of them, they'll give you better rates every single time because they'll be able to put freight on your truck faster. And when they can do it faster, they can get on your truck and they can close on the load with somebody else. All right, I'm going to stop here, and I'm going to invite my good friend, my really good friend, my brother in trucking and brother in arms up. So Todd Amon is the president of American Truck Business Service. That's what ATBS stands for. And as I mentioned, he's his family legacy in this, and I'm excited for him to talk to you about contribution of margins. So Todd, stage is yours, my man.
Thanks, buddy. Afternoon, everybody. I didn't know Brent had his own fan club. That's new since I've been on stage with him. That's pretty cool. I'm going to have to talk to you guys later because I've never had one. The first time I think Brent and I did this together, which is probably about 20 years ago, we used to have entry music. So, you know, instead of music, he got his own fan club. That's way better. Johnny Cash, I've Been Everywhere, Man, I think was the song he used to play. So I think what I would say is the people out there on the floor walking around, loading up their wagons with pens and little squeezy balls and rulers and all kinds of fun stuff are having a great time, and they probably think y'all are either got sore feet or you're, you know, dumb for sitting in here. Why would you go sit in here when there's all that stuff out there? But I can tell you you're the smartest people at the show because you're in here to learn, and as you learn, you're going to get better in your business. So it's Friday afternoon at whatever, 1:30, and we're going to talk about some accounting stuff. So again, are you the smartest people at the show? I don't know. That's not how I spend my Friday afternoons usually, but I hope you're in for a treat. I just want to help you understand some things because we're in a market that has been tough for a few years. And you know, how do you make it through a tough market? It's a good question. You need to actually manage your business. In 2021, anybody could do this and make good money, right? It was that easy. And today, if you're still in business, congratulations and God bless you. It hasn't been easy. So one question Brent didn't ask that I'd love to know is how many are company drivers thinking about becoming owner-operators in here? Good. So I got a good feel when you ask the questions. We got some owner-operators. We got some small fleet owners. This stuff I'm going to talk to you about is going to apply to just about anybody that is in here. And I'm going to start off just, I want to help you get some exercise because you've been sitting now for 15 minutes. Raise your hand for anybody that would haul a load. When you leave here and you get on truckstop.com and you see a load for $3.50 a mile out of Louisville to wherever, how many would take that load today?
I would. I need more information.
That's good. I need more information. If it paid you $1,200 today, how many of you would haul that load to leave Louisville tomorrow? Need more information. I like you guys. No wonder you got a fan club. They're smart. They're smart. So, how many of you know what your miles per gallon are on your truck? Just about everybody that runs a truck these days knows their miles per gallon. If Brent and I were up here 20 years ago and we asked that question, you'd be surprised, but probably less than 20% of the room would raise their hand because the truck didn't have a thing that told you what the miles per gallon were, and it took some work to figure that out. How many in here know what your fixed and variable costs are? We do have a smart room. Good. So we're going to talk about a few of those things, and I don't want to overwhelm you and think that you came in here and enrolled in some class that's going to be Like, what am I doing here? I'm going to sneak out the back of the room. We're going to talk about some of those things because in a market like this, you have to know those things and you have to understand those things to actually make money over the long term. So we're going to get started by just the outline of the stuff I'm going to talk about. First, we're going to talk about revenue and the components that make up revenue because there's a lot of them. We're going to get into your costs. And again, a lot of people think of a cost as something that I spend money on, right? If I spend money on maintenance or fuel or parking, it's an expense in my business. To get to contribution margin, which Brent mentioned earlier, you have to break that out between fixed and variable costs. We're going to spend a little time talking about that. Ultimately, we're going to talk about contribution margin. Most people that run a business think about it revenue, expense, net income. That's kind of the fundamentals of running a business. Contribution margin kind of adds this whole other level. If you were taking an accounting class in school, it would be more like accounting 202 instead of 101. So we're going to go a little bit deeper because it's important. Hopefully, I got enough time. If not, I'll just talk real fast at the end. We got 40 minutes. We're going to be good. We're going to talk about business structure based on how much money you're making, because there's definitely ways to save on taxes. And we're also going to just talk a little bit about tax deductions, because there's a lot of myths out there, and there's also a lot of things that I think are important for owner-operators to know. So we're going to just start off by understanding what contribution margin is. And again, forgive me, because I know this sounds very accounting, financy, and not what you guys became truck drivers to do is think about accounting, right? You became truck drivers because you want to make money driving a truck. So as you think about your revenue, there's a lot of ways to think about revenue, right? A lot of people think about it by revenue per mile. I loved what these ladies said over here when I said we haul for $3.50 a mile. They said, I need more information. If I make $3.50 a mile, today, but I only get a load that's going to take me 200 miles and it pays me $400, sounds great on a revenue per mile basis, but that revenue sucks for my day-to-day, right? So some drivers, if I'm leased onto a fleet, might get paid percent of revenue. Some might get paid for a stop in transit. Some might get paid for a fuel surcharge. Does anybody know how to calculate a fuel surcharge in here? Do you ever talk to a broker about your fuel costs? It's a complicated formula in some ways.
I know about fuel surcharge, government website based on fuel prices per week.
You nailed it, yeah.
But brokers are not transparent whether or not they are giving out a fuel surcharge.
It's true.
There is some, but a lot of brokers do not give that information.
Yeah.
I asked that question to brokers just 4 or 5 years ago. And for the most part, it's a complete all-in price. And they really don't look at fuel surcharge. They just look at, the total amount that's competitive that day in that lane. And so, but if you know what your fuel surcharge is in the market, you can negotiate that with a broker because they're aware of it. They just don't take it in consideration. So I would say know it so you can negotiate against it.
Yeah, I agree. It goes to Brent's discussion about negotiation, and I'm going to just give you a real quick formula that is not terribly hard. The fuel surcharge has been around for 30 years, but it really came into our industry in 2005. If you've been around that long, Hurricane Katrina hit, and fuel for the first time went over $5 per gallon. It was under $2 for most of trucking before that. And pretty quickly, every trucking driver company in America was going to go broke because fuel just skyrocketed so much. And so this fuel surcharge formula came about. And essentially what it says is whatever the fuel cost is today, let's call it $3.50, that's pretty close. You can find that on the DOE national average every single week. You take a base of $1.25, which sounds crazy, but that's what fuel was back in those days. That's what we built the fuel surcharge around, is $1.25 is my base cost of fuel. So this is how a lot of big carriers negotiate with shippers. They say our contracts are based on $1.25 for fuel. Fuel today costs $3.50. My average truck back in those days got 6 miles per gallon. So I take $3.50 minus $1.25 divided by 6. Today you're getting about a 37.5 per mile fuel surcharge. Again, I don't want to make that complicated or anything else, but when you're talking to a broker and they offer you a load for $1.80, say, well, that's kind of the base rate of what I can haul for, but that doesn't pay for the extra fuel at $3.50. I need a 30-cent fuel surcharge on top of that. A lot of brokers won't even understand that, but if you kind of explain to them, hey, a lot of people are getting paid fuel surcharges, just another negotiating tactic that you can use. So again, we're just talking about revenue, right? What makes up my whole revenue pile of what I'm gonna haul? At the end of the day, you can complicate it or you can keep it simple. The things that you really should know every day, everything that you're doing, revenue per mile, we'll talk about why it ties into understanding your contribution margin, revenue per day. If I could tell you one thing, focus on that, but not just today, over a period of time, because there's gonna be bad days and there's gonna be good days. Over time, they have to add up and equal to make money. And revenue per load. Is this a 3-day load, right? If I left here and I got a $2,000 load, I need more information, right? That's great. If it's gonna deliver in maybe a couple of days, I'm gonna make $1,000 a day, I'll take it, good load. If it's gonna deliver over 4 days, I take that load and I'm not gonna deliver it till next Tuesday and it comes out to be $600 a day, I probably can't make money on that. So think in terms of revenue per day, how much money am I gonna make? So costs. Is anybody in here spending variable costs while they're sitting in this room? If you are, raise your hand. So variable costs are the things that make your truck go down the road. They are things like fuel and maintenance. And there may be more people in here that are spending variable costs than you know, because if your truck's in the parking lot idling, that's fuel, it's a variable cost. And I'd also say that becomes a habit a lot of times that wastes money. It's a beautiful day out there. Unless you got a dog you're worried about or something like that, idling your truck, probably shouldn't be happening today. That's how you save money in a market like this. So fuel and maintenance are our number one variable costs. Fuel's gonna cost me a certain amount every mile I drive. I gotta repair my truck, buy tires, things like that. So contribution margin, it's a big, scary word. Like, what does that actually mean? It's not that hard, and I'll help you understand it and why it's so important for you to understand. Take all the revenue we talked about, right? Whether it's fuel surcharge, whether it's gross revenue for the whole load, and we're gonna minus our variable costs, my fuel and my maintenance. At the end of the day, that's my contribution margin. So just think about that for a minute. And let's put it in an example. These are numbers from, Brent, briefly said it, ATBS, we do books and taxes for about 20,000 owner-operators, so we see everybody that operates in every different segment of the industry. The great thing about that is we benchmark drivers with each other depending on what they do. So we got a bunch of great data. So of all the 20,000 drivers we do business with, last year in the fourth quarter, the average revenue per mile was $1.82. So when I say would you haul below $2.50 a mile or $2 a mile, Brent said it, these are crappy rates, right? I mean, there's freight out there, but we're hauling for crappy rates. It's a really tough market. $1.82 is low. That number was well over $1 higher than that in 2021. So my variable costs, my fuel and my maintenance, let's say those are 71 cents a mile. That was the actual variable costs in the fourth quarter of last year. At the end of the day, when I net those two things out, my contribution margin is $1.11 per mile. So I could stand up here and tell you, and you guys would probably beat me up afterwards, but based on these numbers, you could actually haul a load for $1 a mile at a certain point in the day, in the week, depending on what's going on in your business, and you could actually make money because all it's really costing me to haul that load down the road is my fuel and my maintenance, right? So if I haul it for $1 and my fuel and my maintenance costs me 71 cents, I'm making 29 cents a mile. I know nobody in here would do that, and I wouldn't either. That's crazy. But you got to think about there are times and places where I may have to. I remember right after COVID, man, there were people that walked around here that said, say no to cheap freight. They had T-shirts and they had hats, and everybody was pissed off that rates were down $1.50 a mile. I don't disagree. We all loved COVID rates, but we live in a free market. As Brent showed, I think, something like 270 million loads. It's a free market. There's a lot of trucks, and there's a lot of freight, and the rates are going to go up and down depending on that. So let's talk about fixed costs real quick. How many of you in the room are spending fixed costs right now? Fixed costs happen no matter what you do. If you like Louisville and you're having a great time here and you don't want to go do anything for a month, you're going to just hang out and have fun in Louisville, you're still going to make truck payments, you're going to make insurance payments. There's things you got to pay no matter what you do, right? If you take 2 weeks off, you still got to pay for fixed costs. The only thing you can do to pay for those fixed costs is use contribution margin, generate revenue, which costs fuel and maintenance, and the net of that pays for your truck payments and your insurance. I know this is getting a little bit too accounting-y, but stick with me. There's going to be a good punchline in the end. So I take my contribution margin, revenue minus variable costs, and then I deduct my fixed costs, and at the end of the day, that's my net income. So like I said, if I'm in school Business 101, revenue minus expenses equals net income. We're in business 202, and it's important. Revenue minus variable costs equals contribution margin minus fixed costs. So we added a little section in there. Contribution margin, fixed costs. I'll tell you why in just a minute. The only way for me to cover my fixed costs is to put my contribution margin against that. So we call that, when that happens, our break-even point. And I'm gonna tell you, I think I saw one or two people in here that raised their hand and said they're a company driver, maybe thinking about becoming an owner-operator. I get to talk to a lot of different people in a lot of different audiences. And when I hear owner-operators that talk about their business and don't really think about it as a business, oftentimes I'm like, man, you should just go buy a company truck, because the way you're thinking, you'd just be better as a company driver. As a company driver, you're gonna make X amount of money no matter what you do. The secret to making more money as an owner-operator is the things that we're talking about right now. If you're a hard worker and you're willing to do more, you can multiply your income. You don't just add to it, you can literally multiply your income. We're gonna talk about how you do that. The thing about being an owner-operator is if I don't hit my break even, I got a shovel and I'm digging myself in a hole. And that happens, right? If I don't make enough to pay my fixed costs, my truck payment, my insurance this week, I got to make that up next week. If I lay over, I got to make that up next week. I dig a hole, right? So we're going to talk about a break-even example in real numbers. This was the fourth quarter of last year. We already talked about contribution margin. My revenue was $1.82 a mile. My variable cost was 71 cents a mile. My contribution margin is $1.11 per mile. I got to use that to offset against my fixed costs. So the average driver we do business with has $1,096 in fixed costs in their business. I take $1,096 divided by my contribution margin of $1.11, and it tells me my break even is 987 miles per week. That's just for my business. Okay? Hopefully that makes sense. Makes sense? You guys gave Brent a lot more love. Does that make sense? Right on, fan club. Awesome. Makes sense. All right, so we're going to do okay in our business. We're going to make money. We only got to drive 1,000 miles to break even, but most people have something going on at home. They got rent, they got mortgage, they got family, they got kids to feed, right? So most owner-operators that go broke, which breaks my heart, is not because they're not doing okay in the business. It's because the business isn't making enough to take money home, to pay the bills. So we got to add our personal money in there. Our average owner-operator for personal, when we throw that in, is about $1,971 per week is my fixed cost to pay my mortgage or my rent and those things. So to pay my business and my home, I got to run 1,775 miles a week to break even. I'm throwing this up there because that's averages. So we have drivers that have paid off trucks. They have no fixed cost for that truck. We have drivers that have expensive homes, that have payments on cars and those kinds of things. They might have a higher break even. So, don't take these numbers and say this is your number. You need to calculate these things for yourself. But when you get it in your mind to say, I know my break even is 1,200 miles, or I know my break even is 1,800 miles, it gives you a goal to shoot for every single week. So the whole idea behind contribution margin is that you should know the things we've talked about. My revenue, my variable costs, my fixed costs, and how to calculate it. And again, I don't want to scare you. I don't want to make you get your Excel spreadsheet out. So we'll talk a little bit more about it. I talked about the company driver versus the owner-operator, and these are the secret numbers that a lot of people never really fully understand. A lot of people make that transition from company driver to owner-operator, especially during COVID, right? Because I can't screw up. I could just make so much money. Even in this market today, if I'm a hard worker and I'm willing to do more and I'm willing to manage my business, I multiply my net income, and here's how I do it. If we go through the numbers, an average company driver is going to make, on the low end, 40 cents a mile. If I'm a good driver at an average company, bless you, I'm going to make 64 cents a mile. I know you see ads out there that we're going to pay you $1 a mile, but you guys know like I do, company drivers, very rarely can you make that much money. So no matter what I do, if I leave here and I go run 1,000 miles a week, I'm going to make 50 cents a mile as a company driver. If I run 3,500 miles a week, I'm going to make 50 cents a mile as a company driver. That's all right. Maybe that's what's good for me, but I can never better myself. I'm going to make whatever per mile they set out for me to make. If we take the numbers that we talked about And we say the average owner-operator that we work with, they make 68 cents a mile. So I'm already doing better than most company drivers just because I'm an owner-operator, I'm managing my business. So I'm already making 10 cents a mile more. That's pretty good, right? But that's the average owner-operator. Our average owner-operator ran 93,000 miles last year. You think I'd be good at math because I'm in the accounting business, but I'm gonna call that 1,800, maybe 1,900 miles a week. You can actually legally, I know a guy that runs 140,000 miles a year, does it legally fine as an individual owner-operator. You can run 2,500 miles. So let's say you're one of those people that's gonna work harder. It's not all about the miles, for sure, but when I hit my break even, right? So I paid my fixed costs, my truck payment, my insurance. So I'm at that point where I made those payments. I don't have to make them anymore for that week or that month. I've hit my break even. Now I'm running on my contribution margin, so I literally give myself a pay increase from 68 cents a mile to my contribution margin, $1.11 per mile. And that's why I say I'm multiplying, not just adding to my net income. It's the secret of being an owner-operator. It's really the single reason that somebody should make that decision. When I ask somebody, why did you become an owner-operator? There's always two answers. One is freedom. I want to make my own decisions. I don't want them telling me where to go, what to do. And the second is I want to make more money. And with 75% of the people that take that step, they fail within 5 years. And the reason is because what freedom means to them is I'm going to deny every load now. I'm going to say, I'm not hauling for $3 a mile. I'm going to sit here until I get a better load. They don't realize they got fixed costs that they got to pay when they don't move, right? And that debt adds up. The second thing they do is that company only let me drive 65 miles an hour. It's my truck. I'm going to drive 75, and I'm going to idle my truck because I can. They wouldn't let me. I just spent a bunch of money on fuel. So what freedom and more money means is not making bad decisions. It means understanding your business and how to make money. And I guess I sound really preachy. Do I sound really preachy? I sound preachy, and if it was 2021, we'd be having a whole different conversation because the market was different. This is the kind of stuff that you have to do to survive in a really hard market. This is going to get better. Brent already talked about it. I'll say this real quick. First of all, thanks Truckstop for having me up here. I love being able to talk to drivers and help them learn and get better at their business. Brent's been, letting me do this with them for a long time. I fell in love with Truckstop about 15 years ago because they have data that you can't get anywhere else. And they have something called the Market Demand Index. You don't even have to pay. I know you all pay probably to subscribe to Truckstop. If you don't, this is free. You can get the Market Demand Index every Monday. And it tells you the number of loads posted to the internet divided by the number of trucks looking for a load. And I've just come to know that, like a stock market. If the Dow Jones is up 100 points, whatever percent, that's a good day for the stock market. If it's down 200 points, the Market Demand Index is the trucking stock market index for me. And I'm here to tell you, I don't know if you guys have been talking about this, but the last 3 weeks, that Market Demand Index has been up 8
Going
points
up and up.
per week.
Yep.
It's
It was
over 100.
over 100 this week, yeah.
It's over 100 this week, which is the first time that's happened since before COVID. What that means is that's a breakout. We've been bouncing against 75 on that Market Demand Index for 3 years. We hit it and we go back down. Crappy market. When it's above that, it's good for truckers. When it's below that, it's bad for truckers. So, you don't read this in the news. You haven't heard this yet. It's a big deal.
Yeah,
I think we're in a good market because the Market Demand Index.
Definitely the market is gaining more strength. Let me make a point about this. I want to make a point on what you're talking about for contribution margin. When markets are hard or they're not so rich that you want to haul as many miles as you can, down markets give you time to think about your business. Down markets give you time to plan more for your business. If you understand this principle, this is a planning principle for your business. In this market, if you can make money in this market, and over the last 24 months, can you make money in any market ever? The answer to that is absolutely. So this is why I just appreciate Todd being willing to come up and talk about this, because this is a principle that if you put into your business, no matter the market, you're going to make as much as you can in that market.
100% true.
Yeah.
If it was 2021, I would be saying, number one, you shouldn't be sitting here. Number two, you should go out and you should be driving as fast as you can drive without getting arrested. And you should be taking every load out there because, man, it was just like open up the bag and dump the money in, right? But the world drastically changed in March of 2022 when Russia invaded Ukraine and fuel prices doubled,
Yep.
within 2 weeks, and the spot market rates plummeted. Like literally overnight, I had to change how I operate my business. I got to think about these things rather than just drive fast, get to the next load. That's all it was. So we got in bad habits, not just you guys individually, but read the earnings of Heartland Express, Knight Swift, public companies. They're breaking even because we all got in bad habits. Our costs got out of control because COVID just made that happen. Rates were so good, I didn't have to care about a lot of stuff. To be in business, this is the time where you learn good habits so that when the market gets good, you can open up the bag and dump the money in. So I'm not here to sell you our services whatsoever, but I'm also here to say that the stuff I talked about is kind of complicated. You know, contribution margin, fixed costs, variable costs. At ATBS, you know, we don't just do books and taxes. The favorite thing of mine that we do is we consult with our clients to help them do better in their business, and we do what we call a profit plan. And we call it a profit plan because if I call it a budget, it'd be like going to the dentist and getting a root canal. Nobody wants to do a budget, right? It's like, budgets suck. Who wants to live on a budget, right? I mean, we have to. A profit plan is kind of exciting. I want to go make a profit. So one of our business consultants would spend a half hour to an hour with you asking you 25 to 30 questions, including your personal life. What's your rent or mortgage? You know, how much does it cost to support your home? And we would come up with a template that is going to give you these things, your contribution margin, your fixed costs, your variable costs, your break even, so that you've got that in your mind. It changes as time changes too. We may have to redo this, right? Ultimately, we do monthly profit and loss statements that actually give you what those numbers are. So we can say, are you hitting your break even just like we did in the profit plan? Do we need to adjust our business in any way, shape, or form? So I'm going to just do a time check to make sure I don't ramble on too much because I want to save a little time for questions at the end.
We got about 16 minutes.
Okay.
Because I want to save a couple minutes for questions because I'm sure there'll be some.
I'm going to talk faster, so buckle up. Just kidding. So we talked about a few things of these. The most important thing you can do is not say, wear a t-shirt that says, turn down cheap freight. I won't haul anything less than $3 a mile, or in today's world, $2.50 a mile. Think about the revenue per day, not just a day, but if you can plan out 2 or 3 loads, right? Because there's head haul markets, there's back haul markets. Don't want to go too deep in that. Simple truths. Again, I told you March of 2022, Russia invaded Ukraine. We just had the 3-year anniversary of that. It changed your world. It changed the spot market, literally overnight. As fast as COVID market got good, our market got bad. So I said, drive as fast as you can legally without getting arrested back then. Today, if I save $1 a cost in my business, that dollar goes straight to my bottom line, period, no matter what. If I get 7.5 miles per gallon versus 7 miles per gallon, that's an extra $5,000 a year. If I buy fuel for 40 cents cheaper per gallon than I used to because I got with a vendor here, or Truckstop may have a fuel program, I'm not sure, but get with somebody that helps you negotiate fuel better, that dollar goes straight into your pocket. Every extra dollar of revenue I generate, remember, I got to pay variable cost to do that, so only a portion of that falls to my bottom line. Think about the cost side of your business. It's sometimes hard to do when you get into bad habits. I'm going to talk about freight cycles really quick. I'm in the middle of buying something, potentially it has a lot of lumber. It's going to take a half a truckload of lumber to get to me. And I've been negotiating on it for about 2 months. And the guy called me yesterday afternoon and he said, hey, the end of the month is coming up. It's actually the end of the quarter. And we think vendor prices are going to go up. And we've got this sales incentive. If you buy today, you know, we'll give you 10% off. And I was like, huh. It's a pretty good amount of money. So I think about that and I multiply it by the world of freight. That happens every day right now. So think about freight cycles, right? Like, I love that you guys are here, but there's probably more freight moving. Maybe it's a part of why the market demand index is up the last 3 weeks by 8 points, because we're near the end of the quarter. And shippers need to report public earnings, and so a lot of freight gets moved because people are paid incentives to sell stuff before the end of a quarter. Those things also happen at the end of months. They sometimes even happen at the end of weeks, right? Sometimes freight moves more at the beginning of the week. So whatever you're in, if I'm in the reefer business, freight's going to get better pretty soon because produce kicks in. Also, we sell Christmas trees starting in Thanksgiving, right? So Truckstop has so much amazing analytical information that is available on rates by market and all those kinds of things. But think about your market. Think about what you haul. Think about the lanes, right? I can't stand up here and tell you the best thing to do for your individual business, But again, that's the kind of stuff you need to pay attention to, because 20 years ago, you really couldn't do that. We didn't even hardly have an internet where I could figure that stuff out. Today, you can Google anything, like Grandpa says, or you can, find out answers to that kind of stuff. The cost of a layover. Like I said, most company drivers that go owner-operators say they do it to make more money and for freedom. I want to be able to say, no, I'm not going to take that load because it's snowing and I don't want to go north of I-10 in the winter. I'm going to just stay down south. I'm going to stay down here until I get a load that'll stay, south of I-10 or on I-10. So what happens when we talk about fixed costs and variable costs, that hole that I talked about, I start digging myself in, a layover starts digging you in that hole. I've still got to pay $150 a day, average for my business, throw in my personal costs, $280 a day. So when I say that load doesn't pay well enough, I just got to remember the fact that I just added $280 to the bill I got to pay tomorrow. Now I got to pay $560 tomorrow. So now I got to have a lot more contribution miles running to pay $560. I'm going to talk about taxes real quick. Who loves taxes? I say that joking. The good news is, we have plenty of owner-operators that say, I'm an owner-operator, I'll never pay taxes again. I can deduct everything, right? Our roads and our military are not built with us not paying taxes. So if you pay taxes and you're happy about it, you're smart, because that means you're making money, right? You don't want to pay the IRS any more than you have to. But if you make money in America, you have to pay taxes. And actually, you should want to pay taxes. That's what funds the good things that go on in our country. I won't even talk about. No, we won't go to the political side of that. So what's tax deductible? We get that question a lot. Think of it in simple terms. Is it necessary and ordinary for my business? And if you can answer that question and say yes, and look an IRS officer in the face and say, yeah, I need it for my business, it's tax deductible. I have to have documentation, time, place, and amount spent. It's that easy. So things we know for sure, my truck, my maintenance, my fuel, all those kinds of things. And then there's plenty of people out there that will say, we'll help you screw the IRS. You won't have to pay taxes. We'll take deductions that they don't know about. And we have a tax resolution business. I can tell you get in trouble with the IRS. It sucks, because you can file bankruptcy when you do bad business and get out of debt. You can't file bankruptcy with the IRS. They'll haunt you for the rest of your life, and it's no fun. People commit suicide over it. But there are ways as truckers you can save taxes. So who has a dog in their truck in here? Couple people. Does your dog bark? So in our perspective, that dog is a security device. If you're in the truck stop eating and somebody wants to break in your truck and steal something out of it and your dog starts barking, they're probably going to go into the next truck, right? So we'll take your dog as a guard dog deduction, even if it's a poodle, because a barking dog is scary, right? So, but if your dog gets sick and you take it to the vet and you spend $5,000 on surgery to save its life, is that ordinary and necessary? It's sad, it sucks. I love my dog, I want it to live. But the IRS might say, man, I don't think you can take a $5,000 deduction. So food and a few things, sure, deductible for your dog. Used to be at the home office was a big red flag for the IRS. They realized people were cheating, and so they made a simple formula that allows you to take a home office deduction. The one thing that they say is, the room you use for your home office deduction can't be a bedroom. When your kids come and visit you, they can't sleep there. It has to be strictly for business. It can save you a few $100s in taxes, home office deduction. I think about things like, Hulu or streaming services. And for an owner-operator, just like me, when I go home and I take my wife to the movies, that's entertainment. I can't deduct that. Many of those streaming services are for entertainment. But in many streaming services today, I can get good information. I can listen to podcasts on how to get better in my business. I can check out the weather. I can do a lot of stuff. And so, again, is it ordinary and necessary? Sure. I think it helps me run my business better. So, I can deduct a lot of those streaming services that some people think I can't. I'll tell you a good test for your CPA that does your tax return. Right now, maybe you've already filed, but a lot of people are going to wait till April 15th, which is a few days away. The single most important question you can ask your accountant to make sure they understand the trucking business is, what are you taking for my per diem deduction? A lot of them will tell you $50 a day and 50%, because that's what everybody in America gets to take if they travel for business, like me when I'm down here. I can take a per diem deduction. Truckers have a very specific code for per diem deduction, written just for truckers, which is pretty awesome. And last year that was $65. The IRS raises it based on inflation. They haven't done it for a few years. So October 1st of last year, it went from $65 to $80. If you're an accountant, yeah, it's huge, right? $80 for every day I'm on the road. If I'm away for 300 days, that's a $24,000 tax deduction. We could get complicated, and for time we won't. They'll only let you take a percentage of that, but that is a big tax deduction. If your accountant is still doing $65 or something less than that, they don't understand trucking. So ask them that single question. If they don't get it right, move to somebody else. A lot of accountants don't know it went from $65 to $80 last year. One more thing I'll throw at you that one of my tax people just told me a couple weeks ago. I've been doing this so long, you'd think I know everything. But he said, drivers are getting a lot of points at truck stops for spending money there. And they love to use that for the free steak or the free whatever. Not even showers. Showers are deductible. Don't spend your points on things that are free. Spend your points on food, because I get $80 today no matter what I do. IRS is going to let me deduct $80. Take those points and buy things with them. I don't know, CB radio, whatever you want to buy for your truck. Even showers, spend it on things I can deduct in taxes so I can try to spend the money. Use the free points to buy your food. Last thing I'm going to talk about, if you're in here and you pay attention to this and you operate pretty well, our top owner operators, top 10% last year, I think they made $230,000 in a really crappy market. Net income, $230,000. Our median, 50% that have been with us for more than a year make $86,000. So this is a little IRS game you can play to save money. And I call it a game, but it's completely legal. Most I'd say 95% of owner-operators operate as a sole proprietor because it's easiest. And they just do a Schedule C on their tax return, and they pay their taxes based on what they made. If I make over $70,000 a year, I'm not telling you should incorporate. From a legal perspective, there's reasons to and reasons not to. This is just an accounting and tax perspective. If I set up an LLC and tax myself as an S Corp, I can save myself thousands of dollars in taxes. The way it works, the numbers are up here, but I'll just explain it to you real quickly. I make $70,000 in my business, no matter who I am, S Corp, LLC, sole proprietor, I'm gonna pay income tax on that. Net income on my business, roughly 20%. So we're gonna pay $14,000 in income taxes, no matter who I am and what I do. Where I save money is if I set up a LLC and tax myself as an S Corp, I pay myself payroll in my business. And all the IRS says is that it has to be a reasonable wage. They don't define a reasonable wage. We work with thousands of owner-operators in the IRS, so we can tell you what a reasonable wage is. Let's just call it $40,000 for the moment. I can pay myself, whatever, $3,000 a month. That's my reasonable wage. As an owner-operator, you got to pay self-employment taxes, about 15%. That covers your Social Security and Medicare when you retire. So on that self-employment tax, under that LLC, taxed as an S Corp, I'm only going to pay that 15% on the $40,000, not the entire $70,000. If I'm just a sole proprietor, I'm going to pay that 15% on the whole $70,000. So I'm going to pay a lot more in self-employment taxes. At the end of the day, that saves me $4,500 in taxes. It costs more because it's a little more complicated. I got to set up that LLC. I got to do 2 tax returns, one for my S Corp, one for me personally. I actually have to do legitimate payroll. I got to do withholdings. We do that. Again, I don't want you to think I'm up here trying to sell you anything. People will do that for you. You can use payroll services, paychecks. We can do that for you. At the end of the day, we're going to charge you about an extra $1,500. So net, you're going to save $3,000 in taxes. So with that,
all right,
we saved a few minutes.
Perfect timing. Yeah. Here's my chart. I put it at the end. Go back one.
Here you go.
All right. Hey, serendipity. All right. First off, this is the chart I was talking about, the expansion, and this is what I mean by normal market. The red line is the normal amount of loads posted in the spot market on any week. Each pillar is a week. When it came down in here in 2022, notice that the peaks and valleys are right at the red line the whole time. This is today. This was last week. We're 17% above a 5-year average of loads in the spot market, the most dynamically changing marketplace. When freight volumes go up, rates go up. That is a given. That's a standard. Sorry. So thank you for getting to that. I just put it the wrong spot. Any questions? Let's talk. Any questions out here in the crowd? Come on. Come on, somebody. Come on.
The fan club's got to have
Yes,
some
we got one right. What's your name, sir, and what's your question? I know I'm a little disappointed by my family over here. So, yes, sir. What's your? Yeah.
I will. Yep, I will. It's complicated, and I've explained it to people 10 times. So $1.25 is the base price of fuel, which sounds crazy because we haven't been at $1.25 in a long time. But like I said, back in the early 2000s, before Hurricane Katrina, that's what everybody said. Let's just assume fuel is $1.25. So that's what we're paying for fuel. If I say I'm going to charge you $2 a mile to haul your freight, that's assuming I'm paying $1.25 for fuel. I today got to pay $3.50 for fuel, so I need more money on that $2 a mile of fuel surcharge. Today's DOE national average is like $3.55 a gallon, but I'm going to call it $3.50 for simple math. Today's DOE national average is $3.50 a gallon minus that base of $1.25. What is that? $2.50? $3.50? $2.25. Anybody need a job in the accounting business? Because you're doing it quicker than I am. So $2.25, back then trucks got 6 miles per gallon. So I divide that $2.25 differential by 6 miles per gallon, and that's going to give me about 37 cents a mile. That's an average fuel surcharge today. So I like that.
You said 37 cents?
Yeah, about 37 cents a mile, right? So if my rates are predicated on $2 a mile, then I really need $2.37 a mile to cover what fuel is today.
Right.
If fuel goes up to $4, do the same math, and I probably need something like another 44 cents. So that's how the fuel surcharge goes up and down.
Todd, has the average miles per gallon that it's weighted on, has it changed it from 6 to 6.5? I read somewhere it changed to 6.5.
It's different. So shippers negotiate this with every contract they have. And it's funny, right? I mean, you hear people say, I like it when fuel goes up. If I have a contract based on 6 miles per gallon or even 6.5, and I'm getting 8 miles per gallon, it's like an arbitrage. I'm actually making more money because they're paying more on fuel than I'm paying for the increased fuel. So yeah, there's also some called breakthrough fuel that you may have heard out there. That's a much more real-time priced fuel surcharge. So there's a lot of variables, but it's good for you in your mind to just think about what is my fuel costing me above what the market is setting as a general rate right now.
Yeah,
it helps kind of
Great question. Great question. Thank you, sir. Another question. Yes, ma'am. What's your name and what's the question? Your name is what? Hey, Amy. Ah, very true.
It is.
Right. Yeah.
Sure.
Yeah. Right.
Yeah, so they have
Don't forget your tolls going to Massachusetts as well.
It's true. If you just Google DOE national average fuel price, it'll pull up the website you're talking about. I think it's ein.gov or something.
Yeah.
It'll tell you pad sites. I think there's 6 pad sites, and it will tell you East Coast, West Coast, and you can get that deep on your fuel surcharge based on the price.
Did some math the other day. I took a center point of the United States, and I went west, and I can't remember, the load was like $1,900. And I went east, and it was $270 more just because of the tolls. So pay attention. The details are important. Another question. Thank you, Amy, for your question. Is there another question? We got time for one more. Come on, one more question. One more question. No more?
My name is Gretchen Long with Long Money Trucking Services, and I work with my community.
All right. Thank you, Gretchen.
I just want to say that it's very validating and useful to see things operate from a numbers perspective.
Yeah.
Because this is the stuff that they don't want to hear.
Yeah.
But focusing on these things can truly make a difference.
Yeah. Well, thank you, Gretchen, for saying that. I appreciate that. I mean, thank you. The goal is for you to enjoy your trucking business even more and more and more. And so whether you want to drive 140,000 miles like a friend of Todd's, or you want to drive 50,000 miles a year, the goal is for you to enjoy it more, because in the end, you're a private business owner, and you did this so you can have the best freedom in your life possible. And so that's why you take the risk. And so if you'll pay attention to the numbers, you'll just enjoy it more. And that makes trucking better. That makes our country better. So that's what we at Truckstop, and I know Todd and his team at ATBS, that's what they want for all truck drivers that are out there. That's why we're so dedicated to standing up on stage and having fun and talking to you guys and just continue to communicate it no matter what. Listen, thank you so much on behalf of Truckstop and ATBS.